Hello everyone and welcome back to my channel. As of every week, we will jump into the fundamental, sentiment and technical analysis, not just of different currency pairs, but also of different indices, plus Bitcoin also, and we will check also the gold market commodity to see what's happening. So it's overall market analysis, but as always, we will start with the fundamental sentiment of Forex currency pairs, then we will jump a bit by bit. So, first of all, there is a lot of news that came out, some of which are positive, some of which are negative. Before we continue, don't forget to hit the like button and subscribe for weekly analysis like this. Let's continue now. So, previous week I've had my eyes on Euro JPY, but I was waiting for price to reach this area of resistance since we don't have a supply zone. So, the most uh, area of interest for me is this resistance zone. Plus, I didn't want to take a trade when the RSI was below the moving average. Right here, we jumped above the moving average. We are very near this area. So, if the fundamentals and sentiment aligns, we will take a short position on this pair. If you want to watch the previous week's video, I've had this pair on my eyes, still on my list, waiting for the next week. There is a lot of opportunity during the next week. If you see my symbols, there is a lot of symbols that I'm looking at during the next week. So right here we have this segment where it gives me the fundamental strength based on currencies and based on data. So we have the pound strongest right now, USD very strong, Australian dollar and Japanese yen from a fundamental, from actual data coming out. Now from a sentiment perspective, Japanese yen and pound still in the same area. That's why there is a currency pairs opportunities created. And right here we have CAD, this is Euro, Australian dollar and US dollar. US dollar having the weakest sentiment right now. But if sentiment starts to get better and better, we shall see a move in the US dollar since it's a strong fundamental currency pair. And in the final rank, we have some currency pairs that we can create opportunity with to trade during the next week. What I'm looking at is pound, yen as currencies to buy, and euro and CAD as currencies to sell. So we from these two to buy and these two to sell, we can create four different currency pairs to have opportunities coming into the next week. And this is what's happening right now. We have the Euro JPY, CAD JPY, Euro Pound, and Pound CAD. Now, after I finish with the indices and commodities, we will jump into the technical analysis. Let's continue now with the indices pair, with the indices related to every country. So, USD, so US dollar, USA, interest rate cycle right now is on hold. So they are not looking to cut yet, but there is cuts coming into the next year. This is good for the stock market. Inflation is somewhat cooling down. GDP is above 1.5%, so it's in a safe zone, but unemployment rate is somewhat sticky. Okay, so if actual is higher than previous, it means that unemployment rate is somewhat sticky. Overall, the markets are bullish. Also, from a forecast point of view, which is sentiment analysis, it's also very bullish. The problem is in the political perspective. But now, since Trump had a 90-day tariff pause, we can see markets rallying. Also, another stock indices that we can look at is UK 100, the SX5E for Euro, and the Australian index market. These are the final results, and if some of these indices are bearish, I don't trade short indices, I just long them. So until it's bullish, I do not touch it. So we have opportunities on the S&P 500, we have opportunities on UK 100, SX5E, and we have the ASX 200. This refers to US index, UK index, Euro index, and Australia index. Now, how do I know that if there is any opportunities of not or not or not? We finished the fundamental analysis, we finished the sentiment analysis, we have in our brain the backbone of political analysis. Now we jump into the technical analysis to finish all of our analysis, and then we jump into the weekly data to see when there is opportunities to enter the markets. So I know that I have four different indices to have opportunities at, and four different currency pairs. Also, since let's say Bitcoin is also leveraged by the risk on sentiment. So if there is risk on in the markets, if everything, economic growth, everything is going good, inflation is controlled, we see rallying in Bitcoin. So we will study Bitcoin and we will see how the XAU-USD could be affected. So let's start first with the Euro JPY. As I said before, this is a very important area of resistance. Now, if I wanna know which day has great opportunity for this pair to be traded or to enter a short position, what I do is I have weekly data right here entered. So these are important data that I follow from the economic calendar. And as you can see, Euro JPY on Wednesday at 12 p.m. local time is my best, in my opinion, the best opportunity to trade this pair. Why? Because we have the inflation data of Euro. If inflation data misses expectation, there is a huge opportunity to enter the market shorting this pair. Why? Because if inflation comes out less than expected, it means that there is higher probability that the uh, European Central Bank will cut interest rate, which will make the pair or the euro currency cheaper. So it will devalue the euro currency. That's why it's a very high probability, high opportunity to take a trade during or after inflation rate data based on price action analysis. So what I will be looking at is for Euro JPY to stay in this zone until Wednesday 12 p.m. and I go to the hourly chart. I want to see some type of shift in market structure, then retracement into 50%. This would be my entry. My stop loss would be around here, and I target the daily areas. So it would be somewhat right here. This way, I have a very high risk to reward ratio, and also I have a very high probability since my entry is based on fundamental, sentiment, political, technical, and economic indicator influence. So I have different influences that is not just technical to enter the trade. Now let's jump into the next pair, which is the CAD JPY. So Canadian dollar and Japanese yen, I'm looking to short this pair. Now, if I want to short this pair from a technical perspective, I need price to retrace into one of these moving averages. I need price to go above the 50 RSI and above the moving average of the RSI, and I need data to align with this. So I go right here, CAD JPY, we have inflation data for Canadian dollar on Tuesday 3:30 p.m. my local time. So in this way, I have a Tuesday 3:30 p.m. alarm, inflation data, I see inflation data, I check inflation data, if price is around this area and there is opportunity to short this pair, I will be shorting this pair. Now let's jump into Euro JPY. Now, actually, this move for the euro pound, this move for the euro to the upside, I don't know why it's happening, but people are are going into the euro currency from the US currency. That's why the euro is appreciating. Hopefully, with some uncertainties going out of tariffs, everything fundamentally and sentimentally will start to pick up again. So, Euro Pound on Tuesday, 9 a.m., there is pound unemployment rate, and since there is around 24 hours for the next data to come out that affects this currency pair, I can take the trade on Euro Pound. Euro Pound is actually in a supply zone, very old supply zone. We can see that there is shift in market structure right here. If I see retracement into this area, I might take a short position with my stop loss above this and targeting area right here. So it's the target is on the daily time frame. It would be a 1.7 1.8 risk to reward ratio. Even if I take, let's say, at half my take profit, it will be 1 to 4 1 to 5, and this is what I am aiming for. Okay, that's why I don't like for my initial risk to reward ratio to be less than 1 to 6 risk to reward ratio. So right here on Euro Pound there is opportunity. Maybe if price retrace into this area at the early stages of Monday, there might be an opportunity to take a short position, but the ideal scenario is to wait for the unemployment rate of the pound to see if it would align with the data that my strategy is giving me. If it aligns, I will take a short position, and even if I lose, I will be very happy. I will risk around 2 to 3%. If I enter on Monday, I will risk around 1%. So different entries will give me different risk tolerance. Now let's jump into the last currency pair that I'm looking at during the next week, which is the pound CAD. So the pound CAD retraced into a very beautiful area. We have this powerful move to the upside. We have this area of consolidation. So in my opinion, it's a good area to buy from. Why? Because we are also around the moving averages. The RSI is low. We are below the moving average of the RSI. So everything is aligning pretty much good. Now, data Tuesday for the uh, we have data for the pound at 9 a.m. Then we have data for the Canadian dollar at 3:30 p.m. So there is no way to take a trade during these times. So we will wait for Wednesday at 9 a.m. local time for the inflation data of the pound to come out. And based on these data, and previous data also, we shall see if we can enter this trade. So now, as you can see, this is a 1 to 5.64 risk to reward ratio. So I might lower my limit order a little bit just to have a 1 to 6, and if I miss the opportunity it would be just fine, because there is a minimum risk to reward ratio that I aim for, a minimum risk tolerance, and there is different types of scenarios that if I see fit I enter, if not I do not enter, and usually it would be limit orders, so I do not execute market orders, because even after data comes out I wait for retracement, so I do not immediately enter when data comes out. Now we finished from the four currencies that I'm looking to trade during the next week or take opportunity during the next week. Now we will jump into the indices. So we have the S&P, UKX, SX5E, and ASX 200. Let's start with the UK 100. So after this move to the upside, we created some type of demand right here. The retracement of this index to the demand area gave me an opportunity to long this pair, but I did not take the opportunity. So, sorry, not this pair, this index. So, after retracement, we have right here support resistance zone, and we broke this resistance zone. So we created a shift in market structure. Now I'm just waiting for retracement. Now, as I said before, my risk to reward ratio, the minimum risk to reward ratio would be around 1.6, and around this area I have this low right here. So below this low would be my entry if price retraced into this area, and we have right here data for the unemployment rate came out positive for the UK 100. So during Tuesday 9 a.m. local time, I have two different opportunities if the pound comes good. So if the data comes good for the pound, I will short euro pound and I will long UK 100, since also now tariffs are on pause. So sentiment and fundamental analysis will work more than the political analysis. Second index that I'm looking at is the Euro 50, so or EX5E. Also, we created approximately the same demand zone. We retraced and then we broke to the upside. I'm just looking for retracement to enter and take this trade on euro, but I go to the fundamental and we have inflation data at 12 p.m. so on Wednesday. So what will happen? If data comes out less than expected, this will give me opportunity to short the euro and will give me the opportunity to long the SX5E. Why? Because if inflation is cooling down or coming as forecasted, it's good for the indices and the stock market. This is the idea behind it. So this is another uh, index that I'm looking at, and hopefully we will get some movement during the next week. Then we have BTC USD, so Bitcoin, we created a low, we tested this low, and we moved to the upside. So we have right here a demand zone, and after we tested the demand zone, we had shift in market structure to the upside. Now I just wait for retracement, and we have this low right here. We have the moving averages. If we retrace into this area, I will be taking a long position. It's a 1 to 6 risk to reward ratio, so it's at the minimum. So this is good. If we retrace into the 81,000 area, I might take a long position, since now sentiment is cooling off, the fix is cooling off, so we might be creating a bottom on different stocks and indices. Let's jump now to the S&P 500. This is the S&P 500. Also, we created a demand zone right here. We did not yet test this demand zone, although we created this bearish candle. Hopefully, we will test this zone, and we have data retail sales for USD at 3:30 p.m. on Wednesday. This might give us an opportunity to long this index. Then we will jump into the ASX, also same idea. This move to the upside on all the indices are because of Trump pausing the tariffs, and this pause of tariffs created this upward move to the upside. Hopefully we see some retracement, cooling of political effect on different currencies and indices, which will help us start moving to the upside. Also, same idea, waiting for retracement. We have news on Thursday for unemployment rate for AUD. If it comes good for the currency, it means good for the index. So lower unemployment rate, good for the index, and I will try to long this index. Now, why do I have the VIX? The VIX is important to study the risk sentiment, so of the people. So if the markets are in risk on sentiment or risk of sentiment. So if it's below 20, is it's risk on, and if it's above 20, it's risk of sentiment. Now the idea behind it, excuse me, that usually when there is this huge move to the upside on the VIX, usually it comes down in the next 2 to 3 days. So right here, very sharp move on the RSI, then came down. Very sharp move. I'm anticipating risk on sentiment to get pushed back into the markets. Right here, then went down. Also right here, RSI then went down. Another time went down. Every time there is a huge sharp move to the upside, the VIX will cool off after it. So this is a huge opportunity to enter in the indices, especially the indices, because this is some type of bottoming for the indices to continue rallying to the upside. Also, I think BTC have the same idea. Forex markets are a little bit different, since uh, it's affected but not directly like the overall economy, like the stock market and the indices market. So this could create a very high opportunities coming into the next months, even quarters or years, because you know the indices market are always going up. There might be dips, but these dips are just created as retracement for longer term investments. So the idea is that If we start moving to the upside and I am on a trade, I just trail my stop loss. I do not take profits at these highs. Trail until I get stopped out. These are the indices, uh, also the forex pairs that I'm looking at during the next week to see if there is opportunities to take on these different markets. Now we just have the XAU USD. XAU USD, I just look at it from uh, studying the risk on and risk off sentiment, not trading it, because I just invest in gold. I just buy physical gold. I do not trade gold. Gold is very affected by geopolitical environment. So, for example, when tariffs started, gold rised. Why? Because it will create uncertainty, and people will move their money into some risk-off assets like the Swiss franc, Japanese yen, and gold. And this is what's happening right now. This last move that happened, I did not understand it. Why? Because tariffs on different countries are posed by, but it's still on China. So maybe the highest economic contributor is China and the US, and that's why it's creating a high uncertainty. Maybe if tariffs cool down between US and China, we shall see some retracement to the downside and even a downfall, because people will move their money into different indices, into different stock, into a risk on sentiment assets that will create more return on investment based on their strategies and ideas. So right now there is still high uncertainty. Hopefully, if we see gold cooling a little bit to the downside, this will give us higher confidence that the stock markets will start rallying, because it will give us idea that people are moving their money from the XAU USD asset into different stock assets that will give them higher return on investment this year. This video might be long, but because I'm not just trading Forex right now, I started implementing everything into it. Maybe also I will start studying some companies, see how we study the fundamentals of companies from PE to PD ratio to different market caps and such ideas. I'm not familiar with it yet, but hopefully when I become familiar, I will start studying them to have different opportunities in the market. So not just be focused on one opportunity or two opportunities. Every opportunity that comes into the market, every good idea, it will be a good idea to take a trade in it. This is everything for this week. Hopefully it was insightful. If you like this type of content, don't forget to hit the like button and subscribe for weekly analysis like this. Until the next week, stay safe.